Welcome to another live stream, my friends. Well, guys, nice to see some actual signs of life from Bitcoin. Not all hope is lost yet. However, I wouldn't really say that all the red flags are gone at this point either. So we need to approach these markets with a very level head right now. Guys, honestly, the best thing you can do for yourself if you are actively trading right now is completely tune out social media predictions. Don't assume the entire global economy is easier to analyze than a few colorful lines on a chart. So please, for the love of Jeebas, trade charts, not tweets. I personally ignore predictions, fundamentals, FOMC meetings, announcements, all of that sort of stuff, guys. I am not saying that those things don't matter, but I am saying that trading them is incredibly difficult. We don't have early insider information, and if those things are truly going to matter for the price, the chart structure will show that anyways. So with that, let's hop right into my 4-hour Bitcoin chart, you guys. Basically, right now we have some sort of consolidation going, right? We really saw volatility kick into this market a couple of weeks ago when we got this big dump to the downside, that big liquidations event, absolutely wild volatility there. And that obviously opens us up to some ongoing consolidation that will also be volatile. We're going to chop around sideways while the price decides what it wants to do, basically. But I mean, this bounce over here, you guys, I thought this was actually quite obvious because we came down and everybody, first of all, guys, this is something very important that I want to mention. When we had that big liquidation event, everybody was calling this a scam wick. Just because we wicked so far and then got bought back up, so many people were claiming that was a scam wick and it didn't matter for the chart structure. And I was saying last week that actually I think it's the exact opposite, and quite often those big wicks actually tell us that it's a bit of a warning where the actual trend is going. And by the actual trend, I mean we got candle bodies closing and we had those candles trend down towards a retest of the bottom of this wick. We never quite filled the whole thing, but not to be too surprised, we did end up finding support at a 786,886, and that's exactly, guys, that's a perfect example of why I don't like to trade breakouts and why I like to wait for those pullbacks. This was a perfect example. We were waiting for it on these streams, on my public streams, in my Telegram. I mean, I actually mentioned when I was going long there because it just seemed like, it's not even that I was bullish. I was actually quite bearish when we came down to these levels, but a buy level is a buy level. And something I'm able to do that a lot of traders aren't is I can trade against my own emotions because, guys, that comes with years of experience and also a lot of back testing, which honestly, if you are trading at all, you should back test your theories before you start trading them with real money. That replay feature on Tradingview can literally save and make you, well, I mean, the possibility is really limitless. But basically, to go into trading completely blind without doing any homework behind it, I mean, think of going to a university class, which is actually easier than becoming a good trader, in my opinion. Imagine going to a university class with absolutely no education whatsoever and going to write the final exam. That's basically what you're doing if you're trying to trade without any sort of back testing. And most traders, quite honestly, would rather lose $10,000 of experimenting and gambling than they would to put 10 hours of practice into back testing and finding out what your probabilities are and being able to set your emotions aside. And guys, even these trade setups that I show and how I say, you know, I just play the probabilities basically, and people will tell me, well, Stu, it's different this time because this is happening in the media, this is happening fundamentally. Guys, when I went back and back tested 4 years of data, when I go back test a trading strategy, I don't go back to every time that trade setup has shown up in the last 4 years and find out what the headlines were saying or what crypto Twitter was saying at those days. I really don't care. I trade charts, not tweets. And, you know, these last few swings have been very predictable, guys. Literally the day before we got this big capitulation event on this live stream on a Thursday evening, I warned that there was a chance that we would come down to, I actually said about 107,000, I think it was, or maybe it was 105,000, but it was because there was liquidations down here. Yeah, it was about 107,000. The night before, I had mentioned that it's possible we drop to those levels because there's liquidity down there. To be honest, I thought it would take a month to play out. I didn't think it would play out in a few hours, but we were ready for that move. That's why I caught this. I keep hearing how unpredictable that was, but I nailed shorts in that. I played that downtrend beautifully. I caught the bounce here beautifully. I played this downtrend. I caught this swing long. I caught this swing long. It's been volatile, guys, but and I'm sorry, I'm not trying to brag that I caught these moves, but the fact is I was just playing charts for what they are. You know, all of these, the thing is, this nasty rejection that we got 2 weeks ago, it was literally the same reaction we got over here. We had the same bearish fib pull, right? Let's just look at Fibonacci's because that takes gut feelings out. They're just very mathematical levels, right? If we pull looking for where we would find resistance, if we ended up getting a bounce there, we came right up to that 115 fib pocket, a perfect swing fail. After we ended up doing that, we go from our next high, because then that resistance pushed us to new lows. We set up the same chart or the same Fibonacci, and notice what happened. The next swing fail here that everybody was blindsided by, they were already blindsided by that same move previously. And if you can zoom out and look at a chart for what it is, you would have noticed that, you know, especially if you pull fibs and stuff, you'd notice that we had the exact same setup where we just got a swing fail. You know, people were FOMOing long into resistance, just like, you know, what retail loves to do, because retail loves to panic at support and they love to get greedy at resistance, because honestly, at resistance, the price always looks strongest. At support, the price always looks weakest. But guys, I mean, I was pointing out that I figured we would bounce from here. I was actually talking about that when we were trading up here. I said, although I don't know how likely it is, I don't know if it's probable, but it's very possible we pull back to that Stuber fib, because if this was a 5-minute chart, I wouldn't be wanting to long. I would not be looking for longs anywhere here until we got to at least my 786. And market structure is market structure. Whether it's the 5-minute chart, the 4-hourly chart, the weekly chart, market structure is market structure. I treat it all the same. So even though not everybody wants to trade a 5-minute like me typically, I mean, the same setup works for when I take long trades like this, right? I'm still in a bit of a long trade from this one back here. But although I do mostly scalp on the 5-minute, I do also take swings at swing trades on the 4-hour when I have the same type of a trade setup. They just come around less often, right? But everyone was getting very scared at this level, and that's exactly where I would be looking to long, because I'd rather buy support. Support is a buy level, whether that means you're taking profits from a short, you're buying spot, you're taking longs, whatever. A buy level is a buy level. And for me, generally the 786 towards the 115, those are my buy levels. Or if it's pulled top to bottom, obviously those are my sell levels or short levels, however you want to look at it. But just very basic market structure can go such a long ways, you guys. Just understanding when we lose a higher low, for example, you know, that's another warning I can talk about right here. You know, when we ended up getting to that swing fail pocket, and let's just say you never noticed that. All right, let's say that you were too zoomed in, you never even noticed that resistance there. But let's just look at this trend then. Okay, let's microanalyze. If you want to microanalyze and zoom right in, let's do it. Here's a high, here's a higher high, here's a higher low. We lost it. Boom, trend ended. It's really as simple as that, you guys. And when the easier that you can look at market structure for what it is, sure, call it microanalyzing if you want, but you can't argue with that. This whole trend, we never lost a higher low, right? Let's just start from here. Higher high, let's consider this a higher low. Higher high, higher low, 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 lower low, trend ended, nuke town, right? So just understand just how basic that level of understanding on market structure can go such a long ways. And even if you weren't like me, where that was leading you to be bearish at these levels, you know, it's at least good to understand that, to be able to protect yourself, if nothing else, right? Whether that means taking a little hedge short just in case it nukes with a type stop loss, okay, or just taking profits on positions rather than doubling down or tripling down on long positions into resistance. Hey, you know, we lost our trend here. Maybe it's time to consider that and wait for that to be broken before aping into a long, right? So at this point, that's a huge concern that I still have on the 4-hour, you guys, is we never broke the downtrend on the 4-hour. Okay, just the way market structure happened. All of this consolidation, we have not broken a lower high on the 4-hour for me, because when we lost this higher low, we set a lower low. That means this is our pivot point. Lower low, lower high, lower low way down here. That means our lower high is right here. That's the highest point between the two. So our lower high on the 4-hour is still way above us. So to get bullish right now, don't get me wrong, I'd rather be buying at support like I did, but to get excessively bullish and assume that those $200,000, $300,000, $500,000 price targets by the end of the year, that's just nonsense until we have some sort of structure backing that up, you guys. There is absolutely nothing in this chart that's showing that right now. In fact, I would argue that, okay, let's zoom out even further. Let's go to the weekly chart here. Guys, we have this order block here, right? This is where basically the bears tried to make their push, and then we ended up closing our highest candle bodies ever, right? Everyone got very bullish about that because, hey, we had our candle bodies here, we have our higher candle bodies there. But we've lost that order block where we basically got our push from to set us to those new highs. Now, to be fair, there is still this potential for a swing fail from the bullish side, right? I got to give credit where credit is due. I don't want to pretend that there is nothing bullish going on in the charts right now because, you know, as long as we're holding this yellow box here, we are technically holding that higher low on the weekly trend, right? For as much as it was, even though it was only a wick, we had this high. We have these higher highs. That means this was my confirmed higher low. And yeah, although we've already lost it with a wick, we're technically holding the candle bodies above it still. I still have very large concerns that we're flipping that order block into a breaker block and just flipping that support into resistance so perfectly. Even that little pump where everyone got FOMO the other day got right up into that retest and got rejected from there. So I definitely do have my concerns with that. And as well, guys, just where we're at. I know I've pointed this out on my last several streams, but don't assume that this has to play out the exact same. But the last two market cycles, we did get 152 weeks basically from bear market bottom to bull market peak. And that's basically where we are right now. We're at 151, 152 weeks right now. So that timeline is also lining up where, generally speaking, after we hit that timeline, we end up pulling back down to this high time frame liquidations band indicator in a bear market over the next year. Again, we don't have to do the same thing, right? That's where a lot of people really struggle when they start looking at fractals. They assume that they have to play out. This does not have to play out again, but we are getting some very serious warnings on the longer time frame charts that are trying to back up that theory right now. It's at least looking like a possibility, if nothing else. So definitely something to consider there. It does look like we have this consolidation of a bit of a pennant here, you guys, on the 4-hour. I still think it's possible. There's still strong arguments to be made for both the bulls and the bears. So again, I don't want to be completely blind to either of the scenarios, because if we bring up the liquidations indicator, yeah, there's obviously more high leverage liquidations above us, all the way back up to all-time highs. So it's absolutely possible we get that third setup of that same swing fail that I was talking about earlier. It's possible we get the same thing by grabbing this liquidity up here, and then likely we would see the same people FOMO into resistance again, thinking that this time's going to be different. It's got to break out and be used as exit liquidity again. It's very possible that kind of a thing happens, but also understand that we are starting to see a lot of liquidations below us now as well. So either direction really makes sense to me, that the market maker at least has some liquidity to go grab if they want. So I'm open to either scenario right now. Basically anything is possible. And that's the most important thing you can do as a trader, is just understand that your theories could be wrong, right? Have your trade setups in mind, have your targets in mind, have your invalidations in mind. If you don't have your targets, like if you can't set a take profit order because you don't have an actual set target, and if you don't know where to put your stop loss because you don't have a proper invalidation, you should not be entering the trade. That's a part of a setup. A setup is so much more than just entering a position. Anybody can enter a position, but entering a proper position, that's the hard part, right? So those are all things we need to consider, and all things that you need to look at when you're back testing certain trade setups. But guys, you know, I'm seeing so many people say that, oh, that pump that we had the other day, that was totally organic. We were talking about this right before the stream. That moved to the upside, totally organic, but totally manipulation because it got rejected. Even though the rejection was actually slower, that was more manipulated for some reason. When in reality, guys, let's just go back to looking at basic fibs. Let's pull from where we topped out recently. Notice where we got rejected was right in that 786, 886 fib pocket. That's why that level is such a beautiful bull trap, just like on the opposite side. It is a beautiful bear trap, right? That's why I longed that. But it's just wild to me how people claim manipulation every time the price gets rejected from resistance, which we know that's typically where the price likes to get rejected, is at resistance. Just a lot of people don't understand basic market structure as well as they should before throwing money on positions like that, you guys. But yeah, just looking at this, I mean, we're going to have to see. Before I would consider this triangle or this pennant to have any validity to it, to consider playing a breakout trade, for example, I would need to see basically a third perfect touch point off of either the resistance followed by a retest to play that breakout, or on the opposite side of things, get a third touch point of support and then end up breaking it. At that point, I would consider shorting a retest or longing a retest. But I need that third touch point first. If it's just two, I consider that there's a good chance that it's going to be a failed break if it does it after the second test. So it's just doesn't meet the criteria that I backtested for my breakout trading, basically, right? But guys, something I want to point out about where we ended up getting rejected here the other day too, not just the fact that it happened at an obvious resistance level, but let's take a look at the long short, the retail long short indicator here, and just really look at what happened. As you can see, and I see this every single stream, you guys, I always say that, just like when I pull these fibs, retail loves getting FOMO and starting to long into resistance because the price always looks strongest at that point. And you can literally see it with your own eyes with this indicator here. Notice where the longs step back in and we got a bounce was right as we were trading into my 786 resistance here. Just like when we came back down to support, we saw retail starting to short, and therefore we've been able to climb a little bit, right? They start shorting support like that. So, and notice that where they basically, so two things. Let's look at it this way first. Where people start shorting is right at the target for that short setup, right? If you were looking to short this resistance, because the 786, the take profit, the main target is the 214 fib, right? That's my main full range Stuber fib play, basically. So basically we came down to that target, and retail started shorting when I was starting to take profits off my shorts, right? Because I was taking profits at a buy level, aka support, but retail steps in and starts shorting that, and that gives us that fuel to go higher. Now, let's look at the opposite one, because as you guys know, I am still in a chunk of my long, about 40% of my long from down here. But let's look at that trade setup now on the same chart. So my reasoning for that setup was obviously a fib pull like so. And we came into my support pocket, and look what retail started doing, right? Retail started shorting, the shorts started climbing as we hit my support level there, and then retail started to long at my target, right? My 214 fib target, that's the opposite 786 I was just talking about. Just the opposite fib pull basically, but you can just see how these targets and these fib pockets work so well as bull traps and bear traps, you guys, and you can just see it so perfectly with this long short indicator here. It just really shows you just how that liquidity gets grabbed basically. So hopefully you guys are in the column of liking to long support and sell resistance. I know on the chart it always looks like I said earlier, when you get to resistance, that's when the price looks the strongest. We're going straight up into it. But yeah, as soon as you get any sort of cool down, that's where you just see retail get wrecked, basically. Taking a look at some altcoins as well, you guys. This is another perfect example. Yesterday on CT, across social media, I saw people start basically posting a whole bunch of stuff about ASTER. And to be fair, ASTER's been getting its ass kicked. Like, let's face it, it absolutely has. But last night specifically, when I saw people on Twitter starting to say that they were panic selling and shorting this thing to zero, that's right where I ended up taking along, just because I said same thing, right? We filled the wick. As I said with Bitcoin, so often when you get those big wicks, it's showing where the price is trending to. And being that we went and filled the wick, I figured I have to start a long position. I actually had about 4 more entries in my green pocket down here. Never got them, and at this point, since that position hit 70%, I already ended up closing a quarter of it. I've updated my stop loss. It's turned into a nice position already, and if it continues running, fantastic. If not, whatever gets stopped out at break even on the rest, so be it. I don't care if this thing goes to zero. Honestly, it can. I really don't care, but a trade setup is a trade setup, and seeing people shorting into support, I mean, that's just, it's a very common theme, right? So people get scared at support. That's when we want to be looking for buys, though. Whether or not it holds, it's still a buy level when you're trading at support. Ethereum, I've had my concerns about for a while because we got a lower sell signal on the 4 hour on the MDX Trendmaster. I was warning about this, that basically, that's often a very strong warning for me. The fact that not only a lower sell signal, also lower buy signals, just as soon as that MDX Trendmaster switches directions, basically, right? Because we had basically higher trending buy signals, higher trending sell signals. We end up losing that higher buy signal, print a lower one, and then followed by a lower sell signal. Then we got nuked, right? That probably actually printed when we were halfway through. So sometimes it is going to be late like that. But even when we came back and retested the indicator, you can see that we've just been struggling with it, basically. So I do have my concerns with that, because I really don't like to bet against that when the MDX Trendmaster starts trending in a direction like that. Yeah, sure, there's going to be swings to the upside and whatnot, but just be cautious when you get to resistance levels when you see something like that. Because often, guys, I know everybody always wants to use the indicators just for getting in as many positions as possible. Honestly, they should be used the opposite as well. They should be used the opposite, because not only for finding entries, but looking for warnings when to avoid those entries. Maybe if you're looking at taking a swing long on Ethereum, but these things are trending to the downside, maybe just consider, taking profits or de-risking a little bit quicker if you're trying to play against the trend, basically, right? So we can use these for risk management, invalidations, as well as entries, not just entries, right? As I said with Ethereum, this had actually caught it. It caught it a little bit late, halfway through the dump. But look at it on Solana here, you guys. Solana's another one. We had higher trending buy signals, but then we ended up printing a lower sell signal here. And that did print early enough to catch this move, right? This would have printed on this candle close here, and Solana dropped 35% from that. So the MDX Trendmaster predicted that. Maybe me personally, I wasn't expecting everything to dump that hard that day, but there was warning signs that it was going to happen before it happened. Solana's a perfect example there. Hype, very much the same thing. On the 4 hour, it had the exact same signal, that lower sell signal on the Trendmaster. And after that, even though it called it down here, got cut in half on that capitulation, right? So quite often when we see that reversal on those indicators, or when we see those indicators on the Trendmaster, the signals on the Trendmaster trending in a direction, it's not so much that I take every signal on its own all too serious, but when they're trending in a direction, then you at least have that momentum on your side. So that's a little bit of additional confluence for a setup. And like I said, if that ends up reversing, then you got your big warning that things may be switching directions, basically. So that being said, hype not looking too bad, to be honest. Speaking of that, just printed a nice higher buy signal even on the 5 minute here. I do have this potential bearish Stuber here. I don't have orders set for this. I just have it on my radar at this point. So if anything, just maybe consider the possibility of being near resistance if you happen to be in a long, for example. I don't know if I really want to bet against this right now. There's a decent, again, just using the trend master, I'm not so sure I want to bet against this trend while we have significantly higher sell signal, significantly higher buy signal. So I just don't know how confident I feel on that. But there is potential resistance up ahead. Unfortunately, I updated my stop loss a little tighter than I should have on the whole thing, I suppose. Yesterday, I did take a bit of a long on hype just on this Stuber fib here. A nice, beautiful range Stuber fib right there, pulled back to the 786. Got one of my entries at least, and then I was just treating it as a scalp, so I was just bumping up my stop loss as we changed microstructure, basically, right? So just like what I was talking about before, guys, again, just notice how, as micro analyzing as this is, look at how well it is respected. We had this high. Well, let's actually say we had this low, this lower low. That means this was our lower high. We broke that. We started an uptrend. So we set this high. We now have this as our low. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher high, higher low, higher high, higher low. We broke that. I was actually considering this our higher low. Either way, that one got broke as well, and that's where I stopped out my scalp position. Just because there was that change in structure, I thought that, you know what, I'm willing to lock in profits on something like that. But again, guys, as micro analyzing as that is extremely micro analyzing the structure of the chart there. And only on the 5 minute, but look how well we never did lose a higher low until way up here, as soon as we got that bounce off the 786 and broke that lower high structure. So just goes to show how powerful a little understanding of, honestly, the thing is, it is literally very, very basic understanding of market structure, but it very much gets overstepped a lot of the times, and people love to overcomplicate trading. But honestly, the best thing you could do for yourself, and I think the best reward, best bang for your buck, is just that very, very basic market structure. I think that goes further than any indicator. To me, it's always market structure first, indicators for confluence second, but I think that's truly the best thing you can do for yourself. Adrian, I did say I would take a look at Netflix for you. You mentioned you were in a short from that, and I am just going to take a wild guess at what kind of market structure you were looking at. So basically, here is where we have one of those times: high, higher low. We end up breaking that. Okay, that's the start of our downtrend. At that point, you know, this is where we bottom, right? So this is our new low. Over here, even though it was just a wick, we end up getting a lower low. That means this is our confirmed lower high on the trend. Let's just pull a fib from here to where the low was. Oh, where do we get rejected? Would you look at that? Right in my 786, 886 fib pocket. I'm assuming you were looking at something very similar to that. If I were a gambling man, and I definitely am, that's the kind of market structure you were looking at. Again, it seems like it's microanalyzing, and a lot of people would have got bullish at this level because, again, those levels are such perfect bull traps that even though it was just a wick, we did have that low, lower low. Highest point between the two is now our confirmed higher, lower high, rather. And that's where I pull my bearish fib from, because momentum is to the downside because we have lower lows. And I'm just pulling from my confirmed lower high. And then we get that retest. We've hit a couple of the targets. And then the remaining half of your position, if you're playing it like me, then you just kind of see what happens. At this point, so I'm gonna be the micro-analyzing guy here on the 4 hour. But just looking at this structure now, again, since I was doing it on the 5 minute, I'm gonna do it on the 4 hour. We technically did from here. Our next lower low was here. We got a little bounce and we went lower. So at this point, I am going to treat this as my micro lower high on the trend. And that's one of those things where if we ended up reclaiming that level, I would consider taking more profits off a short in that position, just because there's just a sign of strength in that point, that there was an actual micro confirmed lower high that was broken, at least on the trend at that point. And the fact that there is this big gap up here, it is absolutely possible that we see some sort of a bounce, right? How close was that to your analysis on Netflix, Adrian? um, Nailed it. Yeah, we tend to look at those pockets the same, don't we? Um, I did say that I would take a look at Ethereum. I know I already kind of did, but I do want to take a closer look. Sorry, just catching up on the chat a little bit. I will also check out AVAX in a sec, yes. Thinker, which or what time frame are you typically looking at for Ethereum? Just so I don't forget about old AVAX here. Ethereum, let's zoom in a little bit. I will go to the 1 hour. Oh boy. So the Trendmaster still has some nasty looking lower sell signals on the 1 hour. 5 minute today, but usually do more so swing trading. All right. Yeah, as far as swing trades for me, unfortunately, I don't think this did make it down to the 786 yet. No, it has not. So it's kind of a tricky spot right now because we're in the middle of a big range as far as looking for swings, in my opinion. Not to say there isn't shorter time frames to be taken, but that would be basically where I'd be looking for a bullish swing, would be basically looking for something like that. Down to 35.66. As far as bearish, I mean, we could pull the opposite fib in this range. Something like that, where I wouldn't expect resistance to really be until at least 41.60, 41.64 approximately. That's kind of a tricky range. That's kind of the thing, guys, is as far as looking for new swings, so many things are kind of in the middle of ranges right now, at least for how I look at things, right? If you have your own strategy where things are lining up, you have your own confluences, absolutely. I'm not saying there's not a swing trade to be taken. It's just for the type of strategies that I look for. It's just kind of a dangerous zone for the bigger plays, I suppose. Let's take a look at the 5 minute. See if anything really jumps out at me. To be fair, there was a nice trade probably an hour or two ago. Because looking at basic market structure, once again, here we did have this high and we had a higher high here. That means this is our confirmed higher low. And notice if we pull the fib, look where we ended up bottoming out. But now we're already almost at the first take profit there, right? The 0.5 fib. But there is structure for that. So unfortunately, it's a little bit late. But yeah, that would have been a decent position there. Other than that, the only time where I can see that we really broke any sort of structure would have been when we lost this level and then we got that immediate nuke, basically, right? Because this, whether you want to say this was our high, higher high, higher high, whether we lost this level or lost this level, either way, we lost our higher low on the micro trend. And then we got our little dump, and then we ended up breaking our downtrend, right? Because low, lower low, confirmed lower high, we broke that and then went for a little pump to the upside. And now we just basically came back down to retest this other range, right? When we really look at it, since this was our high and this was our higher high, therefore this our confirmed higher low, anything in between here is just chop, right? This range has not changed until we either break through the highs or break through the lows. That's the only way that this range changes. Anything in here is just really small ranges inside this bigger range until that changes, basically. Oh, we lost Tycon Hero. I will still take a look at TRX. Unfortunately, never got to it while he was still here, but I will let him know where to find it. Yeah, had orders at the 786 on Ethereum there, never got filled. Yeah, like Bitcoin did, but a lot of altcoins aren't there. And I honestly don't know at this point if that means that there is strength in the altcoins or if that means that the move hasn't happened yet. You know, things like Solana, Hype, Ethereum, they all kind of look like this, whereas Bitcoin actually came down to these levels. Altcoins haven't. So either that move is still loading or altcoins are actually looking a little stronger than Bitcoin, in my opinion, if that doesn't happen. But again, just kind of in the middle of big ranges, so it's a little risky when looking for those big swing positions. AVAX, I said I would take a look at the 1 hour. Unfortunately, I can't say anything good about the 1 hour right now. I'm going to start with a clean chart here. Basically, at this point on the 1 hour, we have been seeing lower sell signals, basically here, right? Lower sell signal, basically a double top sell signal. Technically a little bit lower, just a C hair there, but a little lower sell, lower sell, lower sell. So we're just seeing this obvious trend on the trend master that every time we get that lower sell, it's a continuation of the trend. And so far we are still holding that blue line as our resistance. Basically every buy signal is a lower buy signal recently, and therefore there's not any momentum favoring it, right? It's very short-lived. They're failed signals, but they're fighting the trend, right? The sell signals are winning because it's a downtrend. What else can I say about this? Let's even, although I do consider wicks, I do consider this part of the structure, but let's just ignore it for now and just zoom into the more recent price action here. Let's get rid of my indicators. And this is obviously our current low. Where was our previous low before that? A lot of people would think this one, but no, actually this, right? This was our low. This is our lower low. This is our confirmed lower high on the trend. So basically we have potential resistance above us, and unless we end up breaking higher than that, unfortunately we have not broke that downtrend yet. And again, just using the MDX Trendmaster, that's just a little bit of confluence that there's some additional resistance against the trend here. Algo Master, what did it have printed here? That one actually would have been invalidated, and I wouldn't have considered that a valid fib pull. So that's another thing, you guys, with the Algo Master. It does have the auto Stuber fib option on it, but you still want to understand how those fibs get pulled and whatnot, because it's easy to just see it on an indicator and say, oh, here it is, and it might have already been invalidated. It may just not be valid, period. It may be an old signal, that sort of stuff. So you still want to know how they work before you're just blindly taking an indicator's word for it. But that being said, when I have things like the indicator agreeing as confluence, I don't know if it's still going to be honest, but let's just look for my resistance fib. Like I mentioned, I was looking for potential resistance if we go back towards our all-time highs. Bring up the Algo Master and notice that it pulls these fibs the exact same of how I have them pulled. So that's where I do like to see them, because, hey, this is where AI is agreeing with me, right? That's a little additional confluence to how I have my fibs pulled. And like I was talking about, there is potential for that same setup to happen again. If we go back to our highs, there is still absolutely potential that we get some sort of a swing fail again, which would, in fact, be the third time that we see it happen at these range highs. people will be blindsided again if it happens. They'll say it's manipulation, whatever. In reality, it's just them not noticing the same chart setup 3 times in a row. Now let's just look for a little more confluence, guys. I know right before the stream started, I had talked about this, that although I'm not a huge pattern trader anymore, I will give credit where credit is due. Let's look for a little measured move here. If we get a measured move from a breakout, depending where that happens, obviously, but notice the measured move would also take us up towards that swing fail pocket, or at least close to all-time highs. And again, bringing that liquidations indicator up here, that would grab all of that high leverage liquidations, right? So again, just looking for confluences. And as bearish as I have been on the trend and still am, and favoring the downside of things, I'm still willing to consider the possibilities that we go higher, because as traders, all we can do is play our probabilities and play the trade setups that we've back tested. Aside from that, people may tell you they know where the market's going, but nobody knows for sure. I've had a very good hit rate recently, which a lot of you guys have seen, but that doesn't mean that I know where it's going. It just means that I know how to prepare for trade setups that I've back tested, and I'm comfortable trading without my emotions attached. That's really all it comes down to. Because in the game of trading, you need to have a repeatable trade strategy. That's just all there is to it. If you're just winging it and going off gut feelings, it is way too difficult to repeat the same type of a trade setup without having, strict rules in place. And that's why I love Fibonacci's, honestly, because I have my entry levels, my take profit levels, my invalidation levels. Boom, easy, repeatable. Short from 1903 on AVAX, I'm assuming, so down here. So you may have done that thing a little bit where you shorted into support. All right, because if we had a fib pull, that's why I don't, although I agree with you, it's a bearish trend. 1903 is kind of, if you were looking for a bullish fib, for example, or just looking for potential support, notice that support basically goes down from 1950 down to 1870 approximately. So you're kind of shorting into potential support, but I do agree the trend is to the downside. It's just that the invalidation is so far away in a case like that, right? Because invalidation would be above $21.60 for me, basically. But again, it totally depends on different trade strategies. If you have certain confluences that are calling for a breakout position to the downside, for example, I just don't like trading breakouts, because so often, even if they're correct, you still end up getting that retracement and get much better entries. So I'm just a little picky. I'd rather wait for those retracements, just like what I was talking about with Bitcoin trading down here, right? I had no interest in, after we broke these levels, for example, I had no interest longing up here. I wanted to see that pullback. It may not have happened. It doesn't always happen, but sometimes we miss trades. But again, not saying that breakout trades can't work. I'm just scared to trade them, because the market makers have been doing so many swing fails and just testing big ranges and ping-ponging back and forth, and they are just really chopping people up. So I have a hard time playing those breakouts. Basically, like last cycle, I played breakouts all the time. This cycle, everybody got excited about big players coming into the space, but the trading game changed drastically this cycle. The big players are destroying people who are used to how crypto used to trade. Honestly, I think that's why most large influencers on crypto Twitter and stuff like that, all the big crypto traders from the last couple cycles are not doing much analysis anymore, and more just different videos. They're politician experts, and just more talking about fundamentals and stuff. But Not everyone, obviously, but there's a lot of those out there. And I think it's because the crypto trading game is a lot different this cycle because the big players got in the space. It is harder. I promise you it's harder. I've traded a few cycles and I can promise you this cycle is harder. You have to keep a much more level head now that the big players are in using smart money concepts and chopping around sideways more, having those swing fails, stuff like that. We used to see so many more breakouts. Guys, those of you who are here, you guys probably all know by now, but I do have my own public live streaming channel as well. I almost every day I do quick 20-25 minute live streams on the crypto trading channel, new channel I started recently. Climbing in subs, love to see it. So yeah, those of you guys who like how I look at market structure, pulling fibs, you know, how I use some of the indicators, if you just want to see more live streams like that. I usually do it about an hour earlier as well for those ones. But yeah, if that interests you, check out my new YouTube channel there. Live streaming every day pretty much. Hype getting close to potential resistance. I'm really tempted to take a short on that. I may end up taking a short on that. And if I do, it would be laddering in something like this. So that if we end up going up there, and that doesn't mean tripling down, quadrupling down on my position, it means I have a position size in mind and I'm splitting it up. And I'd be hoping to get my average entry closer to double top territory so that if I get stopped out, it's a lot more gentle, basically. It also means if I only hit my first entry or two, that it would be smaller gains, right? But I'm okay with that. The name of the game, honestly, the most important thing would be protecting yourself and using proper risk management from there. Yeah, gains are great. But I'd rather soften the blow than to get greedy, basically. Oh, what's the link? Yeah, there's Adrian's. Adrian, I thought I was subscribed to you for months, and today I went and go watch your video, and I wasn't yet, so I am now.
How dare you?
Right? I've watched your videos. I'm pretty sure I've commented on a couple, and yeah,
Mm-hmm.
apparently wasn't subscribed, or I unsubscribed by accident.
Might
Or
be. Yeah, you didn't like something.
oh
That might
yeah,
be as
you
well.
might have said something bearish, so
Yeah.
you said something bearish, or in my case,
Yeah.
bullish, so I
Watch
left.
out. Watch out. Exactly.
Yeah, you're not saying what I like, so I will unfollow you. It's funny, guys. That is a real thing, by the way. We joke about it, but I nailed this short from 125.2K. Nailed a short there. Called it out on a live stream, even on a public one, and I literally lost followers when it dumped. I hit a 940% profit or something on that trade, and I and called it live, and I lost followers because people did not like that the price went down and that I was saying that the price was going down. People would rather have that warm fuzzy feeling than to look at things realistically. And that's the thing, guys, and that speaks volumes for you guys who are here in these streams. Those of you, not just my streams, obviously all the mentor streams here, it goes a long ways. It shows that people actually want to learn how to read charts rather than hold that lottery ticket and then get mad at anybody who says that you might not make a bunch of money just hanging on to that and doing nothing for it. People don't like to hear that. But there's a difference between investing and trading, right? That's the thing. If investing, sure, I have investments that I don't touch. I have a bunch of crypto that I didn't sell at the highs, but how I trade and how I invest are two very, very different things, and you should be able to separate those two. when I scalp trade, or yeah, when you scalp trade, you pull the fibs on the 5-minute higher low, lower high, or you try to find a bigger trend one that is visible on the 1 hour, 4 hour one. Haven't been on your streams for like a year because they are so late for you. Well, thank you for being here late for one. But yes, I know it's late for a lot of people. Honestly, the way I look at it, and something that I don't do as much as I used to, and I should get in the habit of doing again, is every Sunday evening I used to basically zoom out and start on the weekly time frame and map out any like obvious trend lines or any obvious levels, and I color code it and then go down to the daily and then down to the 4 hour and the 1 hour and the 5 minutes, so that you kind of have those important levels of all your time frames there, and they're color coded so that, you know, it's easier to notice. But yeah, when I'm scalping the 5 minute, I still like to zoom out eventually, right? Zoom out on things from time to time. Like right now, I'm in a couple of scalps from the 1 minute, actually. Both have taken a little bit of profits because we had this buy signal here. So even though it was a lower buy signal, I wasn't taking it all too serious, but it was a reason to downsize my risk. So I did take some profits off both of these scalps. But my stop losses are at break even, and at this point they can go against me. I don't care. I'm protected unless there's a crazy slippage event, but at least I'm not using cross leverage, so that doesn't really matter. Worst case, my position gets liquidated, but realistically that's a one-off kind of a thing, especially with Bitcoin. But yeah, basically the first scalp that I took earlier was, I mean, I was talking about microstructure earlier, you guys, right? Here's just another example of basically high, higher low, lost that level, ended up taking a momentum short because it's a nice tight range. It's very micro analyzing, but I understood that we could come back and get a retest of some kind, right? But I was looking at such a small potential reversal that I was willing to at least start some sort of a position there. So I started a scalp there, and then later we ended up getting the lower sell signal, which I've been talking about with the trend master. Got a lower sell signal. That was a bit of a reversal warning, just like the higher buy signal earlier. So yeah, that was just a warning. So I took an additional short, and yeah, we'll see how they play out from here. Again, just a couple different strategies, right? That's how the trend master is my favorite indicator. There's a bunch that I do like. You know, I've been liking the capital flow index recently. I've been liking the liquidations indicator. But the trend master is the one that I really like because of those reversal warnings. Just when you see those signals end up changing directions. And honestly, it's probably the same with like the algo master, for example. It's just I got in the habit of using the trend master with my settings, but it's not so much that it's my settings specifically or anything like that. It's just how I use the indicator. I'm sure you could notice it on several different indicators that it's not so much just looking at every individual signal, but notice when those signals are happening, like what if they're trending in a direction, do they call for continuations like that? That's more so how I like looking at most indicators. Because a lot of indicators, especially in choppy sideways price action, will give a lot of mixed signals, right? But when they're trending in a direction, at least you have a clear invalidation, basically. And like I said earlier, even if you're not getting into a new position by using that, let's say you saw this warning here, this lower sell signal that I shorted. Let's say you saw that, but you were very bullish and you didn't want to believe it and you didn't want to take a short there. That's fine. But if you're in a long, maybe see that as a reason to lock in a little bit of profits, because there's just a warning sign that things may be changing, right? Protect yourself. Do I do any algo trading, like with the bots, you mean, Dave? I don't do any bot trading, no. I should. I just personally haven't. I like my strategy. If I could figure out how to get my strategy automated, I would absolutely do that. But I just have very specific strategy, and I've tried to look into it, but I have failed miserably. Thinker, wait, so you started a short not at the 786, but when you broke the higher low? Yes, but I had additional entries higher, right? When we broke this structure, I wanted some in there just because we hadn't broke even a higher low on the 1 minute for a significant amount of time. So I figured there's potential for a decent pullback. But I did have this, like when I entered here on the momentum, I also pulled a fib, and I was hoping for a pullback up to ladder more aggressive entries, but I just got my one scalp with some follow through. So sometimes on a structure break, I'll throw a little bit in, but that won't be my full position in that case because it's a little bit of a FOMO play. But the risk management is there for those kinds of setups. And also when it's that tight on a 1 minute, I'm also very okay if I would have just got stopped out on that position. For a potential reversal for a scalp type of entry on the 1 minute, I wasn't really too worried about it. That's obviously the kind of trade that I wouldn't share publicly at the time, for example, because for one, it's either going to happen very quickly, like basically what it did. I wouldn't even be able to share it in time for a good entry, explaining my madness. But also it's not a proper pullback, so it is a little bit YOLO. It is a little bit of some cowboy activity there. But yeah, so I got a couple scalps running at least, and I do have the swing long running still, 40% of it. Also that ASTER position, still have 75% of that running. But I think that's all my positions right now. I bumped up my swing short stop loss a little tight. I wasn't looking at resistance properly, and I wanted to lock in more profits on it. Unfortunately, I lost my nice swing position short, but whatever. It is what it is. I got these two. Hopefully one of them runs. We'll see. Yeah, exactly. You sometimes you start to see those YOLO opportunities after years of trading. Exactly. It's one of those things that it's not necessarily good practice or a good habit. So I wouldn't want to, basically, as long as you understand proper risk management, then it's okay to take some of those risks. But a lot of people, just because, I've made some nice calls, a lot of people would say, oh, Stu is shorting this right now. I'm going to use way too much freaking leverage and way too much position size. And when I get stopped out, it's all his fault, right? So those positions, when they're high risk like that, I don't want risk management to go right out the window. Could I explain the ASTER trade? I was struggling looking at the Telegram setup. So basically, I did a public live stream yesterday. Yeah, you were in there, I'm pretty sure. So basically, like I was talking about earlier with these big wicks that we see in the chart sometimes, a lot of people call them scam wicks. I actually consider it that it's an early warning sign telling you exactly where the price is going to trend to. We filled that wick down here. And at that point, as bearish as it looks, support is support until it's broken. So I pulled a fib from the lows there because I also want some wiggle room for invalidation, right? Because that's another thing. A lot of people would say, okay, it's a double bottom here. If we drop below this wick, I'm out. I actually had about 4 positions laddered in my green bottom, or 3 or 4. I can't remember what it was. I canceled them all now because the position's running. But I had orders. I only got about 1/6 of my entry in, right? So I got a much smaller position than I was hoping for, but that was a part of my risk management. The fact that I thought that, for one, this is a very volatile asset. So even if we would have got stopped out, this is a very tight looking stop loss, but it's still a 16% move to the downside to invalidate that. And even at 5x leverage, I mean, you're risking liquidation in that sort of a situation. So that's why I had, 5/6 of my, basically like damn near 80% of my position laddered in this box down here, because I wanted to bring my average entry down towards the middle of this pocket basically. So I started a position because, hey, we filled the wick. We are right at support. I mean, just looking at this, even if we pretend it was a Stuber fib, I'm just getting a better entry than the Stuber fib, because when I looked at it, I had someone in my live stream yesterday request me to look at ASTER. Other than that, it wasn't on my radar at all. But as soon as I looked at it during the stream, I was like, well, yeah, we're right at support. Pull a fib so that we have proper wiggle room below us, ladder in some entries. That was kind of my thought process there. And again, just because this is such a volatile coin, I shouldn't even say only. To me, 5x is low leverage. But yeah, very volatile and very dangerous. But that's why I was laddering in lower, closer to my invalidation, right? The weaker it looks, but the tighter the invalidation would just mean that the loss is going to be that much softer. And if we happen to hit my 115 perfectly, I would have hit all of my entries, had the full thing, and then reverse. Great. If not, my average entry would be somewhere in the middle, and it would have been a small loss. Or a lot smaller than if I entered all at the 786, for example, or all at the double bottom. To be fair, it would still be about a 30% loss, 35%. But that's also where you factor in how much margin you're going to use, right? Basically, anytime you enter a position, you should have a rough idea of how much money you're going to lose if the trade goes against you, because no matter how good of a trader you are, you understand that losses happen, and controlling losses is a very important part of trading. Oh yeah, that was a 4-hour setup. That was a big one. That's why that pocket is so big, right? The swing fail pocket alone is a 10% range, 11% range. Very volatile.
Now I can hear you. We lost you for a second, I think.
Did anyone else lose me? I don't think anyone lost me.
Oh, sorry. Then it was.
It's just you. How embarrassing. Just kidding. But yeah,
Guilty.
guys, so another thing, just talking about this as risk reward, like obviously it's going to be a lot different now, because my average entry is a lot different than it would have been had I got all my entries. But my main reasoning for taking a position like this is just looking at the potential, if we're going to retrace the range, and it's a long shot, but that's more than a 10-to-1 risk reward for if I would have hit all my entries, got my average entry in the middle there, factoring in invalidation, figuring out where the opposite end of that range is if we're going to go retest it. And that's a 10 or 11-to-1 risk reward. So even if it would have got stopped out, that's a risk I was willing to take, basically. Obviously, I'm going to be taking, well, like I said, I already closed a quarter of it because it's in a nice profit. But obviously going to be taking profits along the way. Like if we now actually hit my first target, the 0.5 fib, yeah, I'll be closing another quarter. If we hit my 214 target, I'll be closing another quarter. From there, I would probably just leave the remaining quarter run as a moon bag, just in case that home run does come, but not banking on it, basically. But yeah, guys, I think that's about all I wanted to go over this fine evening. So I hope you guys at least found parts of this live stream useful. Like I mentioned, if you guys do like what I go over in these live streams, you want to see more of my public live streams, make sure you subscribe to my new YouTube channel, the Crypto Trading Channel. Yeah, doing basically daily live streams over there, pretty much, at least a few a week for sure. But yeah, going over more examples, how I pull fibs, more examples of how I look at market structure, how I'm using the MDX indicators, all that good stuff, you guys. So yeah, if you like these live streams, be sure to get in there. And obviously, those of you who are watching this on my other YouTube channel, StuTube Trading, and you want access to the MDX ALGO indicators that I use each and every day, there is a 10% discount link in the description down below. As well, link to trade no KYC on BloFin, where I do most of my trading. That also gets access to my private Telegram, but that's all on my new trading channel as well. I'm pretty sure this position, yeah, that one would have actually, let me check, might have just taken or basically break even, but basically, let me just see if my one position got stopped there. Yeah, so that guy got stopped. Just a small profit, basically covered the fees, and I still have the one up here, so I'm going to get rid of this guy here. But yeah, from there, we will see what happens. I still have my long swing position open. I still have this scalp short that may turn into a runner, and got that ASTER long, so we will see how these positions run going into the evening. With that, I think that's about all, you guys. This will be uploaded to StuTube Trading, the YouTube channel, as well as in the MDX ALGO Academy. So if there's anything you need to catch up on or rewatch or anything, that's where you can find it. With that, I'm out. Stay safe, my friends. Peace.